Number 2, okay? Again, we didn't script this. We haven't asked you guys beforehand. And I think most of you watching or here today would have said my number 1 reason I don't like the ARM loan rates are going to go up. I'm going to guide you a little bit on this one because I want to make sure we go to the right place. But there's a second reason why most people that I talk to are not willing to look at an adjustable rate mortgage. They just won't do it. And it's because they're fearful that this loan caused something. I want you guys to think about the media, think about the news. I don't care if you watch Fox News, CNBC, ABC. What has the media told us about the ARM loan?
They're not good for our homes.
They're not good for our homes. They make us go under. Anything else?
They cause the mortgage collapse.
They cause the mortgage collapse, okay? This is where I get to show off my art skills again. Okay? You guys will know what that is here in just a second. I want you guys to see if you know what I'm drawing. And what is that?
Upside down house.
An upside down house.
Underwater.
Okay, I want to make sure you guys knew that was water, not clouds. This is not a house floating around in the sky. This is an underwater, upside down house. When we say underwater, that means we've lost equity. Everybody knows what losing equity is. It's when your house is worth a heck of a lot less than what you owe on it. That personally happened to me. I was in a situation, still am unfortunately, where I paid this much for my house and people are only willing to pay me this right now. That was part of the housing collapse. When we see this, when we talk about the media, we talk about the housing collapse, the Great Recession, the mortgage implosion, when companies like GMAC went out of business. Lots of companies. That's one of the main ones that people, they remember that name when I say it. But these big banks went out of business because of the housing collapse. I'm here to tell you, as an industry professional that's been in the industry way before the housing collapse and 7 or 8 years since the housing collapse, I guess it's been 5 or 6 years since the housing collapse, ARM loans of any type, there's a catch there. There is one ARM loan that's bad. But most ARM loans did not cause this housing collapse. And I can certainly tell you the VA hybrid ARM loan had absolutely nothing to do with it. The VA hybrid ARM loan was probably one of the most well-performing loans that there was after the housing collapse. And we'll get into that when we talk about how the VA has created this hybrid loan. But I do want to talk about this number 2, fear of housing bubble, okay, collapse, recession. I'm hoping I spelled that right. I'm a mortgage guy, okay? I didn't study English in college. But we got the housing bubble, the housing collapse, the Great Recession. People think the ARM loan was caused by that. Let me tell you what actually caused all of these things. They are liars. Okay, liar loans. I don't want to speak poorly of people because I know a lot of good people that got these loans. They were enticed to do so because of certain people in the industry. But there was something called a liar loan. That's what us mortgage professionals referred to when we were talking about certain types of loans. And what I mean by liar loans is people could state income and people could state assets. What do you guys think I mean when I say state your income or state your assets?
Just say what it is. Say what your income is. Say
Okay.
what your assets.
And guess what? That doesn't necessarily mean lie. That doesn't mean lie. If I asked somebody, hey, how much do you make? And they said, I make $75,000 a year as an accountant, and they can back that up with W-2s or pay stubs, even though they stated their income, that's not necessarily a liar loan. But what happened is when we humans started to realize, wait a second, I can say what I make, even though I don't really make it, and maybe some loan officers or real estate agents were even saying, well, you want that nice big house up on the hill, and your W-2s don't support that you make enough to own it, but you got a great credit score, so just tell your loan officer that you make $500,000 a year, even though you're, not making $500,000 a year. That's the number 1 cause for the housing bubble collapse and the recession. Think about it. If you could go buy a house up on the hill, $2 million home, even though you didn't make near enough money to do it, but the bank said, hey, just tell us you make $2 million, would you be enticed to do it?
If I could afford the payment.
Okay, if I could afford the payment, we're going to talk about that. I'm glad he said that because most people couldn't afford that payment, at least not the ones that were lying or stating their income too high. But here's where the catch is. Now we go one step further. I mentioned there was one ARM loan that I can personally tell you helped create this housing collapse. And it was not the VA ARM. It was not even a conventional ARM. It was what we called in the industry the option, and this word option is going to come into play here in just a second, the option arm. Okay? There was 1, 2, 3, 4 payment options. It was also known as the payment arm, the payment option arm. One was a 15-year payment. One was a 30-year payment. One was an interest only, sorry about my writing, payment. And one was a deferred interest or negative amortization. Okay? We're not going to define all that right now, but I'm going to use you guys as kind of my test case. $2 million home up on the hill. A 15-year payment is going to cost you $8,000 a month. That's what you have to pay for this example. You've got to pay a $6,000 a month payment for a 30-year loan. All you have to pay is interest, okay? And that's going to be $4,000 a month. And then the real kicker here, the negative amortization, $1,000 for a $2 million home. Who would like to have his payment? Okay.
No.
What's the payment everybody's going to pay?
$1,000.
So we go back to your answer of, well, I would buy the $2 million hill on the home if I could afford the payment. Even if it meant lying about my income or inflating it, exaggerating it, I can afford $1,000. But what happens with this negative amortizing loan, your balance that you owe, so you paid $2 million for the house, at the end of year one, you might owe $2,020,000. $20,000 of interest gets deferred and it gets tacked onto your balance. And then on year two, your $2 million home, you owe $2,080,000. And it just keeps going and going and going. And that's what caused that old upside down house underwater. Not to mention property values plummeted and everything else. So it was a disaster waiting to happen. That's what caused the housing collapse. But you didn't hear all of that on the news. All we heard on the news was adjustable rate mortgages and unscrupulous loan officers and mortgage brokers caused the housing collapse. Nobody said anything about the VA loan causing the housing collapse, okay? So, number 2 reason most people don't want the ARM loan, as you guys stated, housing collapse. Did any of you guys, does anybody know someone that lost their house, had to foreclose, walk away from their house because they just couldn't sell it and they couldn't afford it any longer?
Yes.
Okay, if you looked underneath the rocks, pulled back the covers, you'd probably find at the basis of those individuals, many of them ended up getting a loan that they should not have gotten. Very few veterans in an adjustable rate VA loan lost their home. Because what happened after the housing collapse, after the market went and imploded, the Federal Reserve continued to slash interest rates. And if you were on a VA hybrid ARM loan, which is what we're talking about today, your payment went down and down and down with your interest rate. Why? Because what goes up
Must come
must
down.
come down. But nobody talks about that. Right, because we live in a society where we're fear-based individuals. And people react more to fear than to facts.